Good evening, everybody. Welcome to the Sunday Open here on NinjaTrader Live. I am your host, Nick. How is everyone doing? How was everyone's weekend? I don't know about you guys, but I have been slaving over a grill and a stove for the last 48 plus hours. Yesterday, I know I was talking about this on Friday during my mid-morning segment before the Euro close, but I got the first taste of the half steer. We did some T-bones last night, which were absolutely amazing. Almost set my grill on fire. The thermometer on my Kamado grill completely has failed me at this point, and I couldn't quite gauge how hot that was, but I think I quickly learned by the crust on those steaks that it was a touch too warm. So did that, and tonight we're taking some of the ground, and I did a lovely, just in the spirit of Italian heritage for myself, did a nice bolognese. So I hope everyone has been eaten well, is rested, and is ready to attack this week in the markets. If you've never seen this show before, if this is your first time hanging out with me on your Sunday evening or Monday morning for some of our lovely friends I know overseas and in APAC, I think we've had some friends from Australia and Japan joining us the last couple of weeks. So that's always cool. But if this is your first time hanging out with me, we do a light market prep on the Big Four, and I'm even going to talk some DAX tonight because that was what was requested on Friday. And I am a people pleaser, so we're going to take a look at a market I have actually never, I think, truly looked at on a 1 hour time frame, and I've never traded before. But we'll talk about it and see if there's anything potentially manifesting, given all of the headlines coming out from Trump the last 48 hours with more tariffs on Canada, Mexico, and of course the EU. So we'll see how that shakes out to start this week, what the initial reaction is in equity futures as well. So we'll talk about those futures markets, as well as we have the return of earnings season. In fact, the banks are on deck, followed by a couple names in tech, and it's only going to get bigger from there in the coming weeks. So all those good things, as well as what is on the docket for the economic calendar, things that'll get you in trouble or perhaps make you money in the pre-market and throughout the day with our lovely Fed speakers as well. So we'll talk about that, make sure everyone is up to speed and ready to go for their week. Let's go to the charts, shall we? All right. So we'll start off with a look at ES. So if you didn't know or you didn't trade last week, you didn't miss a whole lot compared to where we are trading or where we closed last week in comparison to where we started the show last Sunday. In fact, we didn't move at all. ES is pretty much trading right inside the same general area. And it was a very balanced D-shaped profile when we kind of look at this. I know it's not quite a D, but you get what I'm saying, where basically the value area pretty much in the dead center. Albeit we built this value area kind of stacking up a little bit higher than it was the previous week, which if you remember last Sunday, I was talking about potentially looking for some downside, at least come retest this kind of sticky 240s to 6240s to 6250s type of spot. And in fact, that month open seems to be a lot of support for the time being. We came down right there on, what was that? The July 7th, basically. Yeah, July 7th. Came down, touched the month open, which is seemingly continuing to kind of be a interesting piece of MGI to have on your charts, in addition to the weekly opens. Something else that the markets that seems to matter to the powerful hands that are taking control of this market day in and day out. So I talked about the weekly open a lot. I'm starting to pay more and more attention to where we're opening on the monthly time frame as well. So just another piece of information just to maybe throw on your charts, throw on your longer time frame charts as well. That's going to act as some aspect of a reactionary piece of MGI that I think is going to be important. So, but looking at last week, how did we all handle this? I know there were moments of some great volatility and some moments of some pretty poor volatility. I don't know about you guys, but I was on the right side of maybe one Trump tweet of a tariff announcement where I just happened to be positioned short probably 2 minutes before that came out, and it worked out very well for me. And then I had a moment when I was positioned, I think, to the long side, and another one of those came out and just took out my stop. So that seems to be the regime that we're currently in, where it doesn't necessarily matter as long as you're using stops. There's a chance at any point something could hit the airwaves and absolutely just blow you out of a trade for no reason. So the same thing is going to be true this week, whether it's Trump throwing out these tariff letters and then temporarily saying, "Hey, now we're talking, negotiating once again." But for the most part, it seemed like there haven't been a whole lot of deals. It's been a lot more of returning back to kind of the Liberation Day numbers and tariffs that we were talking about back in April. So we'll see how if the market even cares anymore. I made this joke as I was posting a link to tonight's stream where have we just priced everything in and the tariffs just don't necessarily matter anymore? I don't know. There always just seems to be kind of a knee-jerk reaction from the initial release, and then it gets shaken off and we continue our ever-ending march to a new all-time high. Just about every other day or every week, we seem to make a new one. So I'm going to continue to be cautiously bullish until the narrative changes, until the market shows me something that is saying, yep, that's enough all-time highs for the time being, and we're going to go back and maybe retest some of these old areas, maybe even perhaps this old balance area heading back inside 6100s. Maybe there's a chance this pivot that I've had there for weeks, and I just continue to not want to really look to anything too crazy to the short side, at least on the swing time frame, until we are well back below this level. But how did everyone trade last week? I know it was a little chaotic. I know it was a little nonsensical at times with just the way it was moving, but a very balanced week in the grand scheme of things. We built the value area, basically stacking right above the previous one. And like I said, when we were coming on, one of the things I was looking for last week was, at the very least, if we are going to continue to march to new all-time highs, I just wanted to see my magic little blue box here that I drew 3 weeks ago just retested at some point. I was looking, in fact, a little bit lower. I kind of wanted to see the value area low tested down here towards the 33s. We can't all get everything we want, so naturally we came right back to that point of control from 2 weeks ago, wicked off of it, and then never made another attempt. In fact, last 2 weeks ago's value area high, sitting up here at the 6260s, is going to act as support for the time being, albeit that we built the previous week's value area low sitting here right at the 70s. It seems like we may be in the early stages of perhaps building a new balance area under kind of these 6300s and as high as probably the 6250s. Until the market makes a decision, that may be how I'd be leaning. There seems to be some passive sellers continuing to reoffer up here just above the 6300s. So you take that seriously. We didn't see a tremendous amount of volume build both times we've come up here towards the 6330s. There's been somebody stepping in and ready to sell that each time. So I'm just keeping that in the back of my head. If we want to get more continuation to the upside, if we want to continue to see a new all-time high, then what you are looking for this week is to find a volume build above this. Like, you want to see some consolidation and some RTH trading, honestly, above this area with some enthusiasm, with some volume that we can get behind, maybe to get long and perhaps go take out a new all-time high up here towards the 6340s. That's what I'd be looking for. But as long as we're kind of in this range, I mean, I'm looking to kind of maybe look for sellers continuing to initiate up here towards the 6310s, 6305s that I could potentially ride down inside of 6,300, if not a full value traverse, Travalueverse, that's a new word, a new value traverse back down here towards the 6270s. If we continue to see that sellers offering in this area, I think it's a high probability we may come down and kind of retest the bottom side of this lovely balance range box that's been auto plotted for me by the OFL tools. So that's kind of ES. It's a little slippery though. If we were to lose this kind of 60 this month open basically, and the big option strike that is still probably going to be sitting there at 6,200s. If you lose that, I would imagine we get a nice little retracement back towards last month's value area high, if not my pivot down here towards 6,100s. I'm not saying that's going to happen this week, but given the EU tariffs, given the tariffs on Mexico and Canada, I mean, all bets are off. We'll find out very quickly what the initial knee-jerk reaction is from the Globex Open here in a couple minutes. But I'd love to hear from you guys. How do you think we're going to open on this lovely Sunday evening? I think anybody would probably guess a gap down, but how much? And does it immediately get bought up like the one we had a few weeks ago? If I can remember, I think it was this gap down. Going back to the end of June, was it? Wait, was it that one? There was another gap down on Sunday that was immediately bought. And then we never even attempted. Yeah, I think it was this one where we wicked down here towards the 59.60s, and then we're off to the races for the last 3 weeks. It has to be that one because it wasn't the last 2 weeks. I remember. So I guess that was it before the holiday. So give me your predictions before we really get into the big swing here. That is the Sunday Open. I'd love to hear from everyone's perspective. I hope they buy the dip all the way. Everyone's ready to buy the dip, which I think is a fair strategy, even if it is, I wouldn't recommend maybe buying it tonight, like right out of the gate, but see how things kind of shake out. If we come down, maybe gap down towards this area and we see buyers ready to, with both hands, step in and hold it. But I'm going to be a little cautious this week, just given what's gone on. I don't necessarily want to be the first person to be trying to short this for 6,000, 6,100s, but I would more so be patient for looking for that consolidation and push back up, maybe get back up into one of these levels to try to join along with buying the dip. But I think everyone's hoping for a gap down and then a nice little dip buy. Gap down into a low volume node, buyer step in, bring price back up. I mean, yeah, absolutely could see it. I mean, looking at last week's profile, I would imagine, who knows? We could gap down below the month open for all I know. And we'll find out here in about 90 seconds. But given where we close on Friday, coming up right here around, what did we close at? On ES. Am I looking at that completely wrong? Is it 62.94? Is that where settlement was? No, settlement was a little bit higher. Okay. That's why I'm all confused. But given that we basically finished the week in the dead center of the previous week's value area, I don't have a good guess, honest to God, of where we may actually open here in a couple of minutes. So give me your prediction. Should we play closest to the pin for where the week open may be? We've got 60 seconds, and we're going to watch it on my execution chart, unless it's just a violent gap down, and then we're going to have to switch to a longer time frame. But how did we trade Friday? I think there were a couple opportunities to short this as well as buy it. It was actually decent, kind of range-bound, weird type of day. I don't know. There were plenty of points to be had. I think I caught a decent short during my segment before we signed off for the day, but it seems like there were opportunities. All right. Last chance for everyone's guesses of gap up and gap down. Let's see what we do. I'm going to just scrunch this a touch, just in case this is stupidity. Oh yeah. Nice little violent gap down right to previous week's value area low at 62.72s. NQ a little more violent, in fact, below the monthly open of 22,670s, currently trading at 22,825s. So in the grand scheme of things, we opened right around the previous week's value area low and are holding the July high, at least for the moment. We'll see. Interesting that NQ was below the month open, but it was the same thing last week when the weekly open on NQ. Maybe it was 2 weeks ago. I don't remember. My brain is it is what it is. I can't remember what, but there was a moment when ES was just like significantly away from the week open, and NQ continued to kind of use it as a pivot from the previous week. I said we would gap down. Down we go. I would go back 9 months. Chuck, I don't know what you mean. All right, so nice violent gap down. We'll see how this shakes out as we're going through the show. But we're going to jump to the Nasdaq. But actually, I will call out the week open in ES. Week open in ES, for those of you who do not have it as an auto-plotted MGI, the week open on ES is going to be at 64, excuse me, I keep saying 64, 62.74s. And on the Nasdaq, good old NQ is going to be sitting right around the 22,858s. Let me get the exact number. Sorry, 22,861 was that opening tick. So I know I said D-shaped profile originally on ES, but I guess the logic was I kind of meant when I was looking at this, NQ had an almost perfect D-shaped weekly profile. But this violent gap down, given where it is, given that it's below the July open, this could be interesting. We are below value on the previous week's value area on NQ, as well as sitting right around that. If you guys remember from last Sunday, a spot I was talking about as an important pivot to kind of watch was that 22,820s area. And it pretty much acted as support all of last week and basically was the point of control from 2 weeks ago. So currently we opened right around there. And for the moment, at the very least, still acting as temporary support. We'll see how this continues to shake out. But for the bearish case here, because the bullish case is boring, we continue to build value higher and march to a new all-time high, perhaps even as high as 24,000, because, everything is fine. And that's what we're going to continue to do. But in the event that the party's over, at least for the early parts of this week, then we start talking retracement. And if you remember last Sunday when we were talking about this 820 spot, I was saying if you kind of lose the 800s, do we get, you'll probably have somebody trying to step in at the 22,600s, but the logical place for us to return is the top of the old balance area going back to June, which is going to be sitting basically between these 22,300s down as low as kind of the 2,000s. And this was the same spot. I know it gets weird with rollover and those old prices, but this was another kind of pivot area going back to the previous all-time highs at, in January and towards the early parts of February when we were just kind of meandering in a range around the all-time high. This was still acting as kind of the top or the bottom, depending on, your time frame and where you were looking. But there was a lot of volume traded in that area. And the same thing is probably going to be true if we make another case to come down towards this spot. So I'd be looking, first of all, in the early parts of tonight and even this week, what is the reaction at 800 and kind of this 820 spot, given that we had all of that volume trade last week there. And then if we were to lose that, I would absolutely expect us to potentially come down here towards the 22,600s and at least retest this volume. To the upside, I'm a little more concerned. ES was a little more constructive as far as these highs. NQ just kind of all week just seemed to make a lower high and just continued to kind of sell from it. So I'm a little less cautiously bullish in NQ. It just seems like it was the weaker one at times last week. There was that weird day. It was a day I got in trouble trying to knife catch NQ, and I was kind of fooled by the divergence that we were seeing in ES. You guys will remember that morning. ES was trading around 6,300s, like 63 evens, and that was the morning NQ was just knifing to the downside. It might have been, I guess, July 10th, but I think it was this one where we were just absolutely, that's a 1 hour candle. That was basically the moment shortly off the open. But I'm sure you guys remember that morning. It was just one, I just was a little too eager. I got stopped out twice and then I decided, hey, I'm good. But ES basically was making no attempt to really go lower and was sitting at 6,300. And eventually there was that nice little V shape in NQ that came in, but ES was just kind of holding and slowly just building a little bit higher and a little bit higher. And that divergence basically was giving me at least some semblance of like, hey, this looks like a long. I just happened to get in a couple, a few minutes too early on the second attempt and took the stop out. So as I was kind of saying, it just felt a little weaker for some reason most of last week. And I'm just kind of going to be paying attention to that. But in the early parts of this week, I think 800s is the spot to watch. If we start building below that 820 and you see sellers really continuing to kind of step in beyond the tape, reoffering there, then yeah, I'd happily look to short this at least for an attempt down into the 700s, if not getting that full rotation, albeit a little lower. If we were to lose that, I don't know how many people are stepping in, and given the last few weeks of volume here, we haven't traded there a ton, and I would expect us to maybe come down and retest the 300s. But we'll see. Could be a fun week. I'm optimistic. There's a lot of things going on this week. So far, buyers holding that 820 spot. So another indication that this could be a decent place to just be eyeballing throughout the week. And given that, a little bit higher, you have that week open. We'll see how much resistance that kind of 860 spot provides in the early parts of this week, given that it also transpires with the value area low from the previous week. So a couple things to watch. As I said, to the upside, I mean, we saw it all last week, but just because it was acting as just kind of consolidation, point of control, I think one of the sessions, but this just 23,000's even spot. I hate the big round numbers. It's so dumb that the market does that sometimes. These psychological, just big round numbers just tend to sit there. So 23,000 evens to the upside, another area to watch for sellers continuing to reoffer. It does coincide with the exact value area high from the previous week as well as even the point of control from the last 5 sessions, which of course, this is a rolling 5 days that I keep on this long time frame chart. But given that it's Sunday, that's basically the profile from the previous week as well when we do this show. There's like a whole conversation going on in the chat with each other. And I love it. You guys continue to share insights or whatever it is you're doing, but it looks like everyone's having a conversation with each other. All right. So that's NQ. Like I said, if we get a move to the downside, I think things get a little interesting and there's potential for a lot of opportunities, even some places to step back in and buy it to the long side for a longer time frame move. But if we continue to kind of meander and or if we just if we start to build above this week open, I mean, there's no reason not to be looking for longs up to at least 23,000 and then be holding runners from there to do what Stowe does, which is just buy it high and hold for higher. But for the moment, I mean, this is not even that violent of a gap down, 0.5% on ES and NQ. Honest to God, I was expecting a little more, but where it stopped or where we're kind of holding firm for the time being kind of makes sense. So we'll see. We'll see how this thing evolves as we get through the show tonight, but be looking forward to see what our lovely friends across the pond and in Asia do with the markets open. So we'll find out. We'll jump to crude, which still has not left the range of death. That goes back to last year as well. I know I talk about this every Sunday just because we're still in this dang range between 70 and 65s that crude trades in purgatory forever, but possibly going to break out above this little balance box that we've been in for the last 2 weeks. You've had a couple pings up here. And when we break balance, you tend to get a more outside move, as we talk about just about every Sunday. So what I'd be looking for is is there any attempt, or do buyers continue to defend this kind of 67 spot? Or do they continue to build volume above or the top edge of last week's range? In which case, I would absolutely be looking for a breakout long above 69 for that ride up here towards this kind of mid 70s to 71s. That would then be the top edge of this old balance range from hell that I continue to have coined the phrase that is the 65 to 70 range in crude oil. So this is constructive, possibly for a breakout to the long side, at least up here towards the, like I said, I'd be probably chicken holding this, paper handing this to about 70 evens and saying, hey, I got the move. That's great. But there's a chance we could come up here and retest some of these spots on the value area up here towards kind of the 70 evens, 71 evens, as high as the 70 30s, going back to kind of the pre-Iran Israel news up here. That is just a monstrosity of a structure to the downside. But that floor, for the most part, seems to be holding. You've got the month open here down towards 65s even. So I'd be using this still as a cautious balance range, knowing that the top edge on a longer time frame is still going to be up here in the kind of the 69s to 71s. Volume kind of dries up there. But there's a chance, like I said, that if we get that volume build above this, you're seeing maybe that breakout. Maybe you'll get that nice little trend week up towards 71s. I just would imagine if we broke out of this, there's probably nobody really looking to step in until maybe 72 evens. That would be kind of the June value area high. So there's a chance you get a decent move if we can get some continuation here. And looks pretty constructive so far. The bottom edge of this old balance range continues to hold, continues to act as support. And I would just be cautious, down to runners kind of in this 70s to 71 area. That's how I'd be looking at it. But there's a chance we could at the very least be trying to traverse this old value area. And I say old, it's just is a range that crude stays in, like I said, in perpetuity. It just exists, and crude loves to trade between 65 and 70 and 70s. So we'll see. But I kind of like this. If you can get that dip back down here towards kind of the 68.40, 68.50s, the point of control from the previous week, maybe there's a chance to buy it a little lower. But if not, you're kind of cautious and just patiently waiting to probably find an opportunity for buyers to step back in between 67.30s and probably over here at like the 67.80s. Would make a lot of sense. If ES is above 62.60, I'm not shorting it at all. Yeah, that goes back. That's me still with this little blue box of love, whatever you want to call this blue box that I drew 3 weeks ago. At this point, it really is that spot where it's like, it's hard to get too bearish until we kind of break below this. So that's been there. I mean, I drew this end of June. So what is it? Yeah, it's been like 3 weeks since that's been there. But I agree with you. It's hard to get too bearish outside of like some intraday scalps to the short side, which is really all I've been doing lately. I'm not holding for, the Armageddon swing time frame short, because it's a fool's errand as we're trading at all-time highs until something changes. And realistically, until we get a break of structure, which right now would probably say us breaking inside of those 62.40s, if not lower, before I'd really say, yeah, looks like sellers may get the opportunity for us to come down and retest some of these levels. So I agree with you. So that's, for the most part, the liquid gold that is crude oil. So let's talk about the other gold in the room. GC, who once again has ruined my hope of leaving this, whatever we want to call this nonsense. If somebody in the chat can coin a phrase, I will happily start saying it. But this continues to be the most miserable trade unless you have just been cautiously longing 3300s and cautiously shorting 3400s. Because that's gold's new home until something dramatically changes. And I don't know what it's going to be. I thought the bullishness in equities would put a little bit of a sell in this, and we would potentially come down and retrace some of these levels down in towards the 3000s. Give me another chance to buy it on the longer time frame. But this is an insane consolidation. Going back to April, when we made the all-time highs, I mean, it's just continuing. I'm sure someone with crayon lines could draw like a wedge or something here, some channel. I don't know. I don't use crayon lines and things and shapes to make it to make some trade thesis out of this. Excuse me. But nothing has changed. In fact, I still want no part of this. But clearly, it is continuing to now become more tightly, to continue to consolidate even more tightly than it has in the past, and is potentially coiling up for the wider move that I've been waiting for and hopefully trying to call out every week to no success, that maybe it'll finally happen. I'm not saying it's going to this week because I have absolutely no directional bias right now in the precious metal that is gold. But as we continue to get more and more tightly range bound, there's the probability that that move, whether it be to the upside or to the downside, is going to be rather violent when it does finally break out of this range. So what direction is it going to be? Your bet's as good as mine. My bet was to long gold at 2,500 and absolutely paper hand it at 25.50s. So don't be listening to me on a swing time frame. I have no idea. I can't even hold it past a session, apparently. But for the time being, I think you have to kind of operate inside of, looking to reoffer if you trade this up here towards the 34.10s, 34.15s, basically around that 3,400, looking for sellers to step in and looking to buy it with both hands somewhere between the 32.80s and 3,300s. It just seems like that's our home until we break out of this range. And as I said, when it does finally leave this, when we get I would say a steady volume build above like 34.50s, you're probably wrong. And it's probably going to be very violent to the upside at that point. Or if we break down below perhaps the 32.50s, same thing would be true there. There's a chance that we might go a bit lower. So I wish there was a better trade here. There's nothing. By all means, guys, if you have a better idea than this, outside of just waiting for something in the narrative to change, it's real hard to have a discernible edge outside of just playing the edge of this range. Yeah, it's really 42.10s. Look for sellers to step in and look for them to buy it down here towards the 32.80s. And there's really, that's been the range for the last 2 months. Yeah, and I kind of agree. If we do make a new all-time high or we do break this to the upside, like how much higher is it going to go unless there is a fear in the market for some reason that we need the flight to safety that is gold. And with equities at all-time highs and everything else being fine, I have a hard time believing, I guess, a catastrophic move in gold above maybe making a new all-time high. But I've been wrong before. Maybe something is not what it seems under the surface, and we'll get that. But that would also lead to potentially some correction in equities again. So until then, we trade the edges. So far, let's see. Still kind of just meandering around the gap down in equities. So yeah, that's the big four. Someone on Friday wanted me to talk about DAX. And I am going to preface this by saying I have never looked at a DAX chart with the intention of doing anything technical or any sort of perspective around a trade thesis. This is the first time, in fact, I've ever built a chart for it. But somebody asked, so we'll take a look with volume profile and some MGI. It looks really messy. There's just a lot. I might have to clean this up a little bit. So I apologize. I just threw things on this very quickly. So there's a lot of random lines. I don't even know what these are. So I'm going to fix that because there is just a bunch of random lines for some reason. And I'm not really sure why. But I didn't even notice that when I was building this very quickly before I jumped on the air here. So we'll take a look. I believe the DAX has been just slowly marching to all-time highs, much like the US equities. But God, why are there so many gaps? Is that normal? Genuine question. Anyone that trades the DAX, does it always tend to gap up, gap down like this? That's annoying. I don't like that. But for the most part, looking at this, do the EU tariffs affect the trajectory of this going forward? Does it kind of ruin the party? That was the march up here, I guess, towards, what is this, 24,700s? DAX is much like NQ in terms of just the average daily volatility, or does it just move like that as far as how thin the tape can be at times, so it just can whipsaw 10 points for no reason? I've never looked at an order book on the DAX, so that'll be a treat for me to take a picture at a DOM. I have no intention of trading that this week. I just was throwing one up here. It looks like you had a nice little gap down on Friday. If we were to lose, what is this, 24,300s, then I would imagine we probably rotate down here towards the bottom side of this consolidation that we were in at the end of May into June, in the top section of this little area here, basically where July opened, in fact, sitting right here around 24,070s. I would imagine if we were to lose this, we're going to rotate down lower, and then things get a little interesting. Because I don't watch this very often, but you would see us kind of falling back into, what was probably the old all-time high up here. And is there an attempt to continue to find buyers a little lower? And then you kind of look at this on at least for the last couple months. If we were to lose that, I would imagine we probably fall down here towards kind of the 23,400s. I don't know how much this typically moves in a week. What is that range roughly? I don't know. It's a lot of points in the DAX. I have never looked at this market before in my life, guys, outside of just throwing it on because someone else pointed something out to me. But I don't have a great edge in this. I'm just being honest. It looks a little interesting. I don't know if I could deal with every day is a gap up, gap down like this. It's kind of crazy. And I do apologize too. I don't have data for the DAX, so this is operating on a delay. I know that. So if we were to look at this tomorrow or one of the other times I'm on Trade the Close this week, the data is not live because I don't pay for DAX data naturally. Because why would I? That US trader that doesn't really look at things this in depth on an average day. So I'm going to continue to watch the DAX just so I can add more context to some other markets going forward. But this was a fun exercise for me. And anything else you guys want to take a peek at, unless there's something I see that I think might have some relevance too, I'm always going to happily throw that. That's why I did the YM a couple weeks ago, because it looked like it was primed for a nice breakout to the upside and kind of catch up to the other equities. But this was a request from somebody in the chat on Friday to build a DAX chart and talk about it. And the more I look at this, the more I need to clean it up and potentially give a better perspective as we see things going forward. So Rack City, I think the DAX is closed for trading like 3 or 4 hours a day. So the same way that euros take 2 months of vacation each year. The amount of times I make that joke with some of my European trading buddies, and it's like the joke of the US out of office email, like auto email, compared to what it would probably say for some of our counterparts over the pond. It just always makes me laugh. I guess we're just built differently here. Unfortunately, we're built differently here in the US as far as vacations go. I couldn't tell you the last time I take a vacation, and I don't have a job. So there's something to that, them being on holiday for 2 months. There's absolutely nothing wrong with it. I'm just saying the culture differences in the US, like nobody takes it, nor do they have the confidence in their current job to not only take it as a US employee, but to take the vacation for 2 months and then have an added office or an email that they are 100% not going to respond to anything. The type of people in the US that will do that are very few. So, yes. Like the amount of colleagues and things where it's like, hey, I'm on vacation in Italy for 2 weeks, but if you need me, here's my number and I will get to your email as quickly as possible. Versus like the European response to that would be like, I'm on holiday for 2 months. I'll see you in September. Like that's the difference. The US worker will give you a way to reach them and possibly will respond to you if it's important enough. But to my European friends, it's like, no, I'll see you in September. So always makes me laugh. Anyway, I digress. We're going to get back to the show here. And we'll talk a little bit about what is on the docket for the economic calendar. So, a super, super, super light Monday with the exception of the 3 and 6 month bill auctions at 10:30 Central Time. But the big event is going to be on Tuesday when everyone's favorite flavor of inflation that apparently we don't really feel is going to come out with the CPI data release on Tuesday at 7:30. So I know a lot of people that love to trade this and the aftermath. I have no intention, as always, of trying to step in front of whatever that freight train is. We'll see if inflation is continuing to ease or whatever calculation of inflation that they're currently using. I still scratch my head if you've been to the grocery store or just purchase things. I don't know what they're seeing or what this data is based on, but hey, it's always how the market reacts to it. But as long as things are still showing that it's easing, it's cooling, it's still within or under 3%, I would imagine we get a positive reaction to it, but we'll see. Continuing on Tuesday, we will have the New York State Manufacturing Index, followed by a gaggle of Fed speakers, given that there are 4 of them talking throughout the day. We have Bowman, Barr, Collins, and Logan talking throughout the session. Did I miss anything else? Nope. Hey, Jim. Good to see you in the chat. And then we move to Wednesday when everyone's second favorite gauge of inflation with the PPI comes out at 7:30. So we will have that lovely bit of data that for some reason, when it comes out on like Tuesdays and Wednesdays, it just can lead to a very range bound Monday. But hopefully we get a tradable reaction that we can actively find some good opportunities there after the bell. So really, yeah, just PPI followed by Barr talking at 9 a.m. Oh, we have the beige book. Doesn't usually matter, but I always laugh when I say that. There's some jokes there. And then Williams will be talking after the bell on Wednesday. And then Thursday, there's a large amount of 7:30 data releases with retail sales, import exports, initial jobless claims, Philly Fed, retail sales, continuing jobless claims, more Philly Fed. Yeah, so a whole bunch for the algos to parse through during that 7:30 release, followed by business inventories at 9 a.m. and Kugler will be talking as well. Then we will have a 4 and 8 week bill auction, followed by Fed's Cook and Waller talking after the bell. So plenty of data releases in the early parts of this week and plenty of Fed speakers, everyone's favorites. And then Friday, building permits, housing starts, and then my favorite reminder for everybody to be flat during is going to be Michigan consumer sentiment. It is the preliminary numbers, not the finals, but these always can and likely will cause a reaction. The book gets real thin. It's a great way to get stopped out of a trade for absolutely no reason. So I just always call this out when it's on the books. Don't be trading don't flatten your trade as this is coming out. It's not worth it, just given the stupid reaction that sometimes it can get in the first 30 seconds. So just wait. Then you can find a good opportunity if one presents itself. I just hate when people go into this and then we get a very, very negative reaction to it or positive reaction, and it just kind of ruins someone's Friday. It always comes out on Friday too. That's always the reason I like to bring it up again. It's just a great way to just put a poor taste in your mouth as you head to the weekend. So don't do that. And on top of this, you likely will have more remarks, more tweets, more truths rather, because he puts them on Truth Social first, from our fearless leader of the free world, with probably more tariff deals or more letters or reactions to things that are going on. It seems like it's just the current situation where Trump headlines are going to rule the market over any of these possible data releases for some reason. So we'll see how things shake out. What's up, Stowe? Good morning. And then I did say that earnings season is back, and back with a vengeance. Leading us off to this next earnings season is going to be the banks, as always. The big important one is probably going to be JP Morgan, as it always is. And the father of the JP Morgan collar trade himself, Jamie Dimon, has said he sees about a coin flip odds that the Fed actually does, in fact, have to raise rates. So curious to see their earnings and maybe what more he has to say during their earnings call as well. Should be interesting. But we will have JP Morgan, Citi, Wells Fargo, BlackRock, all the big banks reporting in the early part of this week. Well, B of A, Goldman as well on Wednesday before the bell. Johnson & Johnson, Morgan Stanley, PNC. We got United Airlines after the close on Wednesday. Another one people always forget about that can move the semis, TSMC, as well as Pepsi, US Bank, and then the big NQ for all of our single stock traders and people that love to trade the Nasdaq after the initial close is going to be Netflix earnings on Thursday. So the first of many of our lovely Fortune 500 that's going to potentially move the market in the after hours and give some of our craziest traders themselves plenty of opportunities to make points or lose a lot of points very quickly as they release earnings after the bell on Thursday. So Netflix doesn't usually provide the most chaotic reaction. We save that for the likes of Microsoft, Nvidia, Google, and Apple and Amazon. But Netflix is usually always a fun reaction too, because they tend to be by themselves in the situation. So for all of our single stock options traders out there, gear up in the next couple of weeks for your Super Bowl week once again, as we are in the first week of earnings season kicking off. So are you talking baseball in the chat right now? Is it the All-Star break already and I just have no idea because I haven't been watching baseball? Is it the All-Star break? I guess it is. We're trying to talk markets here, gentlemen. I know there's enough gambling to go on the screen, but I guess I had no idea that it really is the All-Star break. It's the middle of July. I should have probably known that. Shows you how much I've been watching the Angels this year. Home Run Derby tomorrow. So place your bets for that as well. That should be a lot of fun. Didn't they change the rules? I haven't watched the Derby probably in like 2 years. But yeah, that'll be fun too. So gear up for All-Star Week for Major League Baseball this week. That should be a lot of fun because it does still matter, in fact, for the World Series home field advantage for some reason. Do they still do that? I don't remember anymore. My days are a blur some of these days, guys. But anyway, And then Friday, sorry, I got very distracted. 3M, Truist, American Express, Charles Schwab, Ally, and a few others. So a very much eventful week on the docket for us. And look at that. Enough DAX. I don't want to talk about the DAX anymore. But we are steadily building volume now above the week open. In fact, with NQ and ES. So far, nice little gap down. Is this going to be a repeat of 3 Sundays ago where we had that violent move down and the market just said, screw you, we're going higher and we're going to continue to go higher and never look back. So nice little gap fill. We'd have to push back up towards the 6290s. So about 20 points higher for us to make that move. NQ's got a little more work to do, needs about 70 points to kind of close that gap from Friday off the open. So this could be a fun week. I don't know. I'm optimistic that maybe there's a chance that we could catch a decent short if we can get that volume build below this 820s area. But I don't know. It is the middle of the summer. Volume is still abysmal. No to the All-Star game to turning home field advantage. So they did change that, Jim. That had to be more recent in the last couple of years, I would imagine. Because they went on that whole "this one counts" campaign, I remember, for the better part of a decade. Although my one gripe with the All-Star game is I kind of wish that they wore the jerseys that they wear for the home run derby for the game versus everybody wearing their own jersey that day. I kind of wish they flipped it, but what do I know? 2017, they changed it. Now it's best record, which is probably the better way to do it because this game really shouldn't determine home field advantage. I never thought it should. 2017, really? Have I been that much in the dark on baseball? I guess so. This is what happens when your home team is on West Coast time and you're on Central time and you can only watch them if they're playing on the East Coast. Thanks for hanging out, Zach. Yeah, we'll be back tomorrow. I'll be trading the close with Leo. It should be a lot of fun, but the whole crew will be back. We'll have the full team, everybody hanging out. Jim will be back to host and take us out so that I don't have to go full influencer and close out the show. We do appreciate that man when he's not there. I tell you that much. When it's left to the peanut gallery to kind of manage those things on the back end. So it's gonna be good that Jim is back and the whole crew is ready to take over, and we'll be back at full strength. Yeah, see, Jim's got it, the full lineup. But let's do a quick recap. If there are no questions, and if you do have some, feel free to throw them into the chat. Happy to always answer them. But if not, we'll let everybody get out of here a couple minutes early and get back to their Sunday. I get to go slave over my bolognese that has been cooking and enjoy a lovely Italian pasta Sunday dinner, because who doesn't love that? So, looking at ES in particular, we'll recap this. A pretty balanced week last week. And yes, Pi, this is in fact a weekly volume profile. So each one of these is the week by week structure on 1 hour candles. So you'll see, and the blue lines, basically, I have them up for you guys so you can actually see kind of where that value area is. But basically, yeah, this is the previous week's volume structure. And then this on the right is a rolling 5 days. So that's always how we kind of do these for each chart. But looking at last week's structure, as I said, pretty balanced. For the most part, there seems to be a passive seller continuing to sit up here in ES around 63.10s. So I'm cautiously watching that. That was the value area high of the previous week. Given that we gapped down, given that the EU tariffs, the Canada tariffs, the Mexico tariffs are hitting the airwaves, we'll have to gauge what the market's reaction is really to that. As we get towards RTH tomorrow, obviously we had this nice little violent gap down, but we stopped right at the previous week's value area low. In fact, that's basically where the week open was. So for us to really see a sell, not only do we need to kind of see some sellers and some volume really continuing to build below this, but the big glaring not round number, but the elephant in the room here is we still have yet to find, going back 3 weeks when I drew this blue box, no interest in returning down to it or having any sellers have any interest in trying to push us below it. So for me this week, I know my pivot's way down here just because I haven't moved it in a couple of weeks because I just have not really been bearish outside of intraday scalps. But for me, I would really want to see us below the month open for July and really seeing sellers continuing to initiate below this magic blue box here. So it even being, given the whole logic of me putting it there, I would want to see us start to find sellers below 62.40. Otherwise, I would expect this area to continue to be defended. I would imagine that. But in the event that we do, I think it's reasonable to assume we probably retrace some of this structure and clean it up a little bit, going back to this chaotic gap down, and then everyone buys the dip and we hit a new all-time high week going back to the end of June. So we'll see. We'll see how that shakes out. But honest to God, my pivot for the week, I mean, I would really want to see the volume build below this. So I'm going to actually put it up there at 62.40s and see if buyers continue to step up in that area. And maybe we start to establish a new balance range, basically between 60, I'm going to call it the 62.30s and probably as high as the 63.10s. I very much could see a scenario where maybe we retest a little bit down here, but buyers continue to step in and we hold up there, and probably we're going to be trading in a new range until there's new information. So that's one of the things I'm watching for in the early parts of this week, but we'll see what the initial reaction is. So far, it's gap down and go fill it and settle right back inside of the previous week's range. We'll see if that actually happens. I always love when we gap down and I wake up and our Euro traders have already closed the gap, and then we get stuck during RTH with like a 20-point range in ES, and it's just the most miserable thing in the world. And I wonder why I don't trade Globex. All right. So NQ, as I said, for some reason, just felt a little more weak to me last week. So we'll see. I'm going to be continuing to kind of watch and gauge for buyers continuing to step in around 22,800s. If you were to lose that, I would expect us to go traverse the rest of 2 weeks ago's value area and volume, and perhaps come down here towards the 22,600s. You lose that, we're probably coming to the 300s. So don't think we're going to necessarily do that without more bad news or sellers finally caring or buyers finally exiting the building with these tariffs that are oddly very similar to what they were on Liberation Day. So we'll see. The market's shook off everything and we're at an all-time high. So it's hard to get too bearish until something changes. And for me, until we were steadily back below 22,300s, I'm looking to buy this. It just on the shorter time frame, on scalps, absolutely. You guys know me. I have no problem shorting this pig of a run to the all-time high, but I'm cautiously bearish. In fact, we'll gauge what the reaction is, but for the most part, I'm watching 22,800s to kind of go from there. So thank you guys for all hanging out on your Sunday evening. As I said, we are back to full strength tomorrow. Tanya, I believe, will be leading us off to start the week and trade the open. And then I, as well as the rest of the OFL crew, will be back in the afternoons to trade the close. But it's going to be a big week. Please do trade safe. If you're going to be trading tonight, be cautious, be cognizant of that 800 spot. And don't do anything too stupid. Don't ruin your account before we even get to the RTH Open. Trade cautiously out there. Have some fun this week. And, we're still in the summer trade, guys. So do not forget about that. The volume, it just dries up at times. And there's always better trades to be had. So trade safe, trade smart. And I will see you guys back in the afternoon tomorrow. But please do tune in tomorrow morning for the rest of the NinjaTrader team. Everyone will be back. We'll have a great week. Let's have some fun. And, take care, y'all. I'll see you tomorrow. Cheers.